Best investing for the beginners advice: how to find good stocks, how to get started with investing, simple steps to start investing intro. How many millionaires do you think are there in the world? How won't believe these numbers, but there's almost 47 million millionaires worldwide. And guess what? 18.6 million of them are right here in the United States. Let me give you one more shocking statistics. Every year, around 700,000 people become a millionaire just in the United States alone. It seems like the becoming a millionaire isn't as difficult as many of us led to believe. But as we all know, it's almost to become one if you do not learn how to invest. Most people are in just in the stocks market, but the problem that many people face is how to find the good stocks. How do you know if that is the good stocks to buy? People usually base their decisions on the news. If the stocks is riding and it gets a lot of the attention, it must be a good investment. And vice versa, of course. Unfortunately, that is the worst way to invest. By the time it's out there in the news, you're probably late. So there's in this video you will learn how to find the great stocks. How do you find stocks that will rise in the value over time? If you stick around by the end of this video, you'll learn how to analyze stocks like the professional investors. Why stocks price mean nothing. Apple has a valuation of the $2 trillion and its stock price is traded at around $120 at the time of this script. But what if I told you that just around August this year, Apple's stock price was $500? Does that mean the company was already valued at $10 trillion and it lost 80% of its value in the last few months? In fact, Apple's stock price in the June 2014 was $645. Does it mean that the company was way too value back then? Not really. That's why looking at the stock price is not is not investing. Yeah. What's Warren Buffett quote? It's if it already seems too confusing, don't worry, because that's why I am here. To simplify everything for you and turn into the professional investors in under 10 minutes, because the YouTube algorithms told me that my audience are some of the smartest subscribers on the entire platform, and they learn 10 times faster than anyone else. So I am counting on you. Don't let me down. If you take a look at the companies that are traded in the stocks market, they have the price tags. But because no one can afford that, they are down into many stocks. The key question is does this company really worth $768 billion? The answer is no. You see, there is a big difference between the price and the value. The stock's price jumps up and down every single day. Even slightly negative news that could be faked can drive the price down. However, not the value, because value is what the company is really worth. For example, in the July 2018, Facebook's earnings weren't as high as some investors expected. So the stock price fell from the 217 to 176. That's a 20% decline. The company was $120 billion for the market capitalizations in the single day. Does it mean that the company become 20% smaller overnight? Of course, no. That's why the stock price jumped back to its pre-decline at its 32% higher now. So if you want to make the good investments, you have to find out the reversal value of the company and then to compare it to the price that it's traded in the market. If it's undervalued, it's the good investments. If it's overvalued, it's the bad investments. It is as simple as that. In 2002, Buffett came across a company called Petrosina. After analyzing its financial statement, it was clear that this company was at least $100 billion. But when he looked at his market capitalizations, the company was trapped at just $30 billion. And based on the political climate, it was clear that the oil prices would rise. He knew that it was a golden opportunity, so he invested almost $500 million into the company. Guess what happened? The company didn't just reach $100 billion value, but put skyrocket to $175 billion. Buffett sold his stakes and earned $3.6 billion from his deal. So the question is, how do you find the real value of the company? One of the most popular methods is to PE ratio, price to earnings ratio. It basically means the amount of the money investors are willing to pay for every dollar that the company earns. It's a simple tool to measure its stocks is overvalued or undervalued. Let's say hypothetically Apple's earned $2,000 this year and has the total number of the 1,000 shares. Dividing Apple earnings on the total numbers of the shares give us earnings per share, or EPS in short. This means Apple has earned $2 for every share. To find the PE ratio, you have to take the price of the share. Let's us assume it's 50 and divide it into the EPS. 50 divided 2, 25. In this example, the investors are paying $25 for every dollar that the Apple earns. In other words, it would take the company 25 years to pay you back. A good PE ratio is considered something around 15. Anything higher than that could mean that the stock is probably overvalued. Tesla's PE ratio, for example, is 970. Does it mean Tesla is overvalued? Maybe or maybe not. While when finding PE ratio of the certain company, we take into account earnings per share for the last 12 months. But when you invest in the certain company, past earnings don't matter. What matters is now how much the company is going to earn in the future, which is why there is something called forward PE ratio. Of course, you can't know for sure how much the company is going to earn in the future. So the number that is used is average of what experts usually predict. If we go back to Tesla, despite it having the astronomical PE ratio 970, in forward PE ratio is closer to the Earth at 123, which means that you have waited 949 years to earn your money back in your investments in Tesla based on its past 12 months earnings. But experts are calming us down by saying that don't worry, is that work? Tesla is going to be much more profitable, so it's just 123 years, which is why most investors consider Tesla and the overvalued stocks. But we all know that Elon Musk is the alien and he is going to prove everyone wrong, as he does all the time. The price to earnings ratio isn't the most accurate method to value the company, but it's the simplest way to have a broad idea of how the company is performing. The company might come up with the revolutionary products and beat an expert predictions. So to make the wiser predictions, you have to consider other analysis as well, such as the price to book ratio, P/B ratio. It basically means how much the company is going to earn if it sold all of its assets and paid off its debt. Let's return back to Tesla. Tesla has gigafactories, thousands of the charging stations, office, patents, and a lot of other assets. Let's say they all amount of the 100 million, but it's also had a lot of debt. Let's say $70 million. If the subtract its debt from its assets, we will get book value of the 30 million. So if Tesla has 10 million stocks, let's book value per share to be $3 shares. To find out how much you will be paying for each dollars, you have to divide the stock's price, which is at least $15, by the book value of share. In plain English, you will be paying $5 for the each dollars of assets that Tesla has. A good price to book ratio in considering something around 1. But sometimes it's really difficult to put the price on the something like the algorithms that Instagram is running on the Snapchat filters. But financial analysis is just one part of the story. Startups, for example, usually have a lot of the debt and not many assets, and might struggle with the cash flow, but could end up becoming widely successful. So never rely on financial analysis as the sole predictor of the company's success. There are many other indicators that we have covered in the previous videos, which links will leave in the descriptions. Nevertheless, financial analysis can give you us a better image of how the company is performing. If you guys enjoyed this kind of this video, let us know by giving this video a thumbs up and sharing it with your friends, and we will make sure to make more similar videos. And if you are new around and want to learn more about the stock market and want to achieve your financial goals, make sure you to subscribe and turn your notification, because that's what we do on this channel. Thanks for watching, and until next time.